Kerry, thanks very much. Let's bring in our market insiders. We have CNBC contributor Don Luskin of Trend Macro. We have Dr. Bob Froelich of DWS Investments and author of A Bull for All Seasons, and Peter Schiff of Europe Pacific Capital and author of The Little Book of Bull Moves in Bear Markets. Wow. Hello, gentlemen. All right, I want to whip around and get some quick takes. I got all these really good friends of mine and terribly smart Wall Street investment types who were telling me, Don Luskin, that the bailout of General Motors, the Car Czar, is a bullish event for Wall Street stocks. Do you agree with that?
Sure. It takes a lot of uncertainty off the table at a time when uncertainty is our biggest enemy. We've got a crisis of confidence, and we've got to dispose of these little annoyances like the Big Three bailout. Larry, I know it stinks to bail out these companies. I hate it. But you know what? The kind of money involved, that's rounding error in a typical farm bill. Let's get it done and move on and get out of this recession.
Can I put your name in for Car Czar?
Absolutely not. If nominated, I will not serve.
Peter Schiff, is the bailout for Detroit good or bad for stocks?
It's terrible for stocks. It's terrible for the economy. It's not a drop in the bucket. First of all, this is just the beginning. They're going to be back again and again and again. This is going to be hundreds of billions of dollars. The Car Czar is probably going to become a cabinet position. We're going to have a Department of Automation. This thing's going to be like the post office. You know, the only thing appropriate there is the term czar. You know, it's got the Russian roots.
Yes.
You know, central government plan didn't work.
It has a certain 19th century imperial feel to it.
It didn't work in the old Soviet Union.
Notice we spell a T-S-A-R on this show.
But the point is, central government planning doesn't work. Washington knows even less about running the automobile industry than the guys in charge of GM now. We've got to let these companies go bankrupt, free up their capital, let somebody come in here who knows how to make cars profitably, that can employ these auto workers in a way that's profitable. I think if we let the companies go bankrupt in 5 years, there'll be 2 or 3 times as many people employed in this country making cars, and we'll be exporting cars.
All right. Dr. Bob Froelich, the risk, you know the risk. The risks are we're in a recession, and if these guys go into liquidation, the Detroit car makers, if they go from bankruptcy right into liquidation, we might lose a couple more million jobs. So therefore, a lot of people are saying, let's say if the House vote loses tonight, if the Car Czar bailout bill loses, stocks open down a couple 300 points tomorrow. So I'll ask you, so far we're in a division here. Is the car bailout good or bad for the stock market?
It'll be bad in the short run, because if it doesn't
It'll be bad
in the short run. But it's a good thing in the long run. Good. No, it will, I'm sorry.
It'll be good. It'll be good in the short run.
Good in the short run,
right,
because it'll support the stock market. It's the worst thing we could do. We don't want to have that bailout happening, but we do know that if they vote no, the market's going to sell off just like it did with TARP. We had that sell-off.
Peter Schiff, do you agree with it? Tomorrow morning, if the House vote loses on the Car Czar bailout bill, how will the stock market open tomorrow?
I don't know how it's going to open tomorrow, but look, bailing out Wall Street didn't help the stock market. It went down. Bailing out Detroit is not going to help. These are moral hazards. You know, the reason they're getting this bailout is because they're saying, well, we gave all the money to Wall Street. Who's next? What's the next failed company that's going to say, well, you bailed out the car companies. How can you say no to me? This is a chain of events. This is a moral hazard. In capitalism, it only works if the success are rewarded. You can't punish the successful companies to bail out the incompetent companies. This is the exact wrong thing that we should be doing. Somebody should stand up to this lunacy.
Don Luskin, you know, somebody should stand up to it. You're going to have another vote besides this little three GM whatever vote. You're going to have a vote to expand the TARP, the next $350 billion of TARP money, which I fear will be used to bail out every candy store on every corner of America, Don. Does Peter Schiff have a point that the GM bailout is actually bad for stocks?
Well, look, the GM bailout is bad for capitalism, but as a pragmatic matter, living through the next couple weeks or months, it's just not bad for stocks. It's good for stocks. We cannot stand that shock. Having this bailout fail would be a big shock, and I think Peter knows that. But Peter and I agree that in terms of the long-term economics and incentive effects and what this does to free market capitalism and the intervention of government and business, in that sense, it's bad. As to TARP, excuse me, Peter, this is my turn. As to your question about what happens with TARP,
yeah,
I agree with you, Larry. I think enough is enough. I think at this point the capital infusions by the Treasury have worked. The remaining 350 is just going to be a honeypot that's going to attract ants, and we've got enough ants in this kitchen. It's time to close that one off and move on and just get out of this recession the old-fashioned way.
So we could TARP the TARP. We could say enough already on the TARP.
You know, we've got $15.5 billion left in the original $350 billion allocation. That's enough to do another 2/3 of a Citibank rescue if we need. So it's not like we've run out. Let's just tarp the tarp and move on.
Dr. Bob, what about this issue? First of all, can one say that the capital injection so far and the other TARP mechanisms, I mean, they're into commercial paper, they're buying mortgages, they're going to buy consumer-backed credit card debt. Can one say that has helped the situation? Incidentally, I have a chart for what it's worth. The LIBOR rate, which fell quite a bit today, that was one of the original measurements of the credit freeze, continues to drop. We're going to put it up on the full screen. There it is. Had a nice little decline today. Dr. Bob, has the TARP helped?
Well, from that chart, it looks like it has. But in terms of anecdotal evidence, are banks really lending? We're not seeing evidence of that. We're still seeing banks that they got the bailout, and then they're still contracting. They're contracting, lowering equity loans. They're contracting, lowering credit card limits. So the catalyst we thought was going to happen.
That's a good thing.
No, but I'm saying the catalyst that thought was going to happen with making that hasn't occurred.
But because it can't. Remember, this credit crunch, this is not the problem. This is the consequence of the problem. As a nation, we borrowed too much money. We borrowed money to speculate. We borrowed money to consume. The solution is the market tightens up on credit because we've blown all the savings. We need Americans to stop borrowing. We need them to start saving their money. We need to start making stuff and not just consuming things. That's what the market is trying to do. That's why we have to let the recession run its course. We can't try to block it because, you know, what Luskin is talking about, let's do something now intentionally that we know is going to hurt us in the long term just because we think we can get a short-term boost out of it. That's how we got into this mess. We blew up this gigantic bubble in 2001 and 2002 because we didn't want to face a tough recession back then.
Do you have a response to what